Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for August 3rd, 2022. We'll start with the market health check. Actually, stand by. Let me upload the reports in case you didn't get it. All right, so today we had this little 3-day where it couldn't break any higher and started to roll over, reverse to the upside, giving us almost a COTA 2 and an RL10 wiggle to the upside. We like it. Broke above the hump of the dragon. Next target in sight is the peak of the RL10, and then this thing should be free and clear at 418 and heading north. The Bollinger Band means are expanding to the upside. You have this leg, moment of pause, and then the second leg, and it's starting the third leg. So that would give us some move to like 427. If the last two impulses have the same kind of strength on the way up, wouldn't be surprised to see 428. So that's another plus $14, which would be about 2.5% of upside, just based on the fact that we're getting ready to clear this resistance. So that feels pretty good right now. The RL30 is healthy. Came out of the river here, so everything from here over is all trending behavior. This is the moment where trending behavior begins. I will also notice that the RL90 has reversed at about the same time that we get trending behavior. The RL90 reversed, and we have cleared the RL270 to the upside and are moving. And you can even see the RL270 slowly starting to turn. So these are all signs of slowly improving health. That's a good thing. In the 30-minute market health check, this was our one-day action here, where here was the close, here was the gap opening, and it closed very strongly for the whole day up, getting through what had been the peak of the dragon back here, and really the local peak of the RL10 here. So this is really a good sign to close that well. And we're still early days of the PSAR flip, which happened here. So that's about 12 bars in. And then the last time it flipped here, that's quite a good move. That's like a 1, 2, 3, 4-day move. So this is day one of what we would like to see is 4 days up. On the downside, we would just say, look, if it doesn't hold above the peak of the dragon, it then has to hold at the PSAR. If that doesn't hold, it's the dragon belly at 410 and the PSAR at 409. That's the last tactical support where you can still feel good about the upside. If it breaks below here, then it's really down to the 5-day low and a fail back to 398. So we'd like to see this hold, but this has to hold, and then this is where you adopt the downside orientation. This is all buy on dip opportunities in here. This is automatic buy on a breakout above here, but below this price level, you have to be ready for the downside with an extra position here and an extra position here if that fails at 390. Okay. Inside the sectors, We have the S&P at plus 1.5 with that real strong finish today. Treasuries were slightly better, or even at 1.57, closing at 119. The Qs were the strongest, up 2.7. The Russell lagged slightly at 1.47. Diamonds slightly less at 1.25, and emerging markets bringing up the rear 0.79. That's only a 2% spread between the best and the worst. The surprising one to me is the Treasuries doing very well, which is a good thing for me. Happy to see that. And you'll see why when we look at that tradable sniper trade from earlier today. Looking at the underperforming sectors, again, the S&P at 1.57. Finance, VIX, Simon Property Group at 1.3. Clean energy, 1%. Then a cluster here of staples and the two lumbers at around 0.6 and 0.5. Then you have agriculture and real estate, 0.4 and 0.3 respectively. Still in the green, but underperforming the Aussie dollar, Brazil, and materials at between 1/4 and 0.1. Into negative territory, lithium, marijuana, blended commodities off 0.6 to 0.9. And then bringing up the rear was the energy sector with XOP, energy, and oil. And then wheat and precious metals off around 2.5 to 3. Underperforming targets, Devon Energy really got smoked at 6.5. U.S. Steel, second day of weakness at 1.2. Alcoa, 0.3. Cliff. So here's our three metals, all underperforming together, with U.S. Steel the most volatile. So that's the one that is in the best position to be an intraday trade, because when it was up large, and when it's down large. So that's what you want to see in the intraday volatility. So the metals are still certainly in play. As an intraday trader, I love the volatility. It's what I want. To the upside, again, the S&P at 1.57. First, we have Mexico and Ethereum at 2%. Bitcoin, consumer discretionary, and tech at 2.4 to 2.6. Blended large cap crypto, 2.7. Then we have the FANGs, blockchain, and biotech between 3 and 3.8. Finishing up with both ARCs at 4.7 and 6%, and Global Future of Finance, 7%. Another strong day in the financial services, and these all just dominated today. Find the movers. Coinbase, 20%. Robinhood, 11.5%. Squarespace, 11.5%. PayPal, 9%. Rivian, 4.5%. Apple, 3.8%. Microsoft, 2.78%. So the two bellwethers for me, Apple and Microsoft, both outperforming the Qs and the S&P tech. So that's a very favorable sign of big money buying the safest of the techs, if we can put it that way. So a relatively wide range of things to choose from. Tesla up 2.25, comfortably above 900 now, closing at 922, and that was a good sign. It had some challenges getting there today, as we'll see, but still resolutely marching on. That's a good thing. Looking at the daily reports now. Sniper trade of the day, ARE. This is the healthcare real estate. Here it's a $1.10 on his R10 standard risk. The morning gap. I thought about trading right away, but this is usually not a runaway thing, so I let the OR5 or OR3 open up, and then when it broke out of that, I went ahead and bought it above the rising PSAR. It gave me an orderly exit here for about a 0.3 gain. Just like to get my feet wet and get paid. Took the COTA 2 for a scratch. Tried to an SSC. This is not a COTA 2. In retrospect, I would probably not take that one again because you have you have this for the COTA 2, but this actually had a lower low, so this is not technically a COTA 2 unless you were treating it from here to here. But it was worth a shot and scratch. Another shot and a fractional loss. So I'm about flat for the day on this thing because the 0.3 pays for that one, and then we're about done. And then it collapses here. And here's the R10 wiggle and another wiggle. I missed both of those. But this gets paid about 1.5. So this was about 1.5 the hard way. It just didn't have a lot of movement on it. So ARE. And that's actually not a good sign for it because the market was up pretty strong today and this thing just crapped out. So I would be looking for this to be a continuation tomorrow, but really to the downside. If it starts breaking down, then that's a sign of company weakness that's making it fail against the run of play, which is up in the broad market. So that divergence tells you it's actual people selling the company. This is not a function of market conditions. That when the market's going up and its sector was up, but it was failing, that's a sign of weakness. We've seen the markets there, so let's go to dashboard number 1. Bearish normal. The improvement in the short term is clear, and now the 90-day look back is above the 50-yard line, so that's good. So only the long term is back underwater. That's actually a pretty strong sign. We're getting within 2% now of the sideways market. ADX is now beginning to get strong to the upside. The volatility is still risk on, and it's not at a runaway level yet, so there's still another good surge in there. First hint of warnings here again, S&P, the Qs, mid caps and small caps. The U.S. is slightly overheated. It can run hot, but just to let you know that we're pushing boundaries now. Now notice that the min pains are now including some techs, Cisco, Microsoft, and IBM, along with conservative Dow 30 and Disney. But Intel is really weak. I just think between Intel and NVIDIA, they have got to be benefiting long-term from a $50 billion investment in semiconductors, bringing that manufacturing home. Got to find out who's going to benefit from that money. Because Pelosi did nothing but accelerate the day when Taiwan Semiconductor is going to get quarantined by the People's Republic. ExxonMobil, Pfizer, and Chevron continuing to underperform. Dow Tactical, lots of dojis today. A handful of auto framers in good shape. Breakouts to the upside on Apple. This is where your relative strength is. Disney's looking good. And Microsoft. So when Microsoft and Apple are leading the way, that has to be seen as a return to normalcy and buying the highest quality tech companies on sale. That's the way to read that. For me, you do your own due diligence, of course. ETF tactical, a handful of dojis, some warnings about overheating. Got it. Nothing on the auto framer because we're so close to the 10-day high. Breakouts were in IWM, the Russell, in the Qs, US Tech, SPY itself, nice new 30-day high and 10-day high. Breakdown in oil, contributing to the gains. S&P Tech breakouts and consumer discretionary breakouts, helped along by both Home Depot, Amazon, and Tesla, the three biggest holdings in that ETF. So that's all looking pretty good. Handful of auto framers. These are all the ones that are significant moves away from their 10-day high. To me, Pfizer, we saw that orderly move yesterday. There's still more room for that as an intraday sniper, in my view. Daily squeezes. I like it when Cliff, Pfizer, Alcoa, and Cliff, Pfizer, and Alcoa on the range compression. This is nice when Tesla is one of the most compressed. And it's been running up. That's a good sign. That's the absence of fear about Tesla. Into the sniper suite. SWK, BAX, and NEM. Two of the three are on strong 5-day volatilities and quiet 1 day. Newmont Mining has completely quieted and is ready for a breakout in either direction. No Godzillas in the tactical symbol set because of the recovery. So we would expect to see more signals on this page, and we do. Now the fireworks are beginning to come to the front, and the popcorns, with lots of quietude in here. You like to see that. When you had really strong numbers on trade locations with correspondingly very low volatility, that's just quiet grinding gains to the upside. The only ones where we're seeing any volatility is in SO and GWW. So there's a potential breakout to the upside that you want to check out. SO. Fence sitters, these two, Devon Energy and VLO, offering opportunities for breakout moves. This was energy, so they're both down large. And it's really just the first day of the move because the 5-day volatility is so small. Gilead Sciences looks interesting. It's volatile in both dimensions. CVS, Regeneron, I don't know who ABC is, and even Procter beginning to start making a move. I would be looking for these breakout, 1-day breakout moves and be looking for second-day volatility. That's how I read that. Also MTCH and STE. Wow, a 5 sigma move to the upside. You'll love to see that. Not necessarily the up. That's probably the downside. Looking at that 10-day score. But STE bears looking at. All the sniper auto framer data for the tactical signal set we've already seen. Summer dominating everywhere. And then here's the sniper stats again for the sniper. You like to see that at Amazon, breakouts with large volume on the 5-day or large volatility, and then a very quiet day. Coinbase was massively good today. And it's been bad, 85% sell-off on the 150-day. But the 10 and the 30-day, both very strong and up plus 20% today. That thing is wildly in play. Robinhood not far behind. Treasuries had a nice day today. Maybe people posturing in anticipation of a sell-off in the equities. Not sure. Devon Energy and Energy itself, both large one-day breakdowns. More room for that on the downside. So I'm looking for the anomalies, the disparities, differences and differentials on this one. On the NDXs, Microsoft, Apple, Squarespace, and PayPal is where the strength is. Apple's looking pretty good in here. Not quite as good as McDonald's was, but McDonald's has given up some of the gains here lately. So I'm now of the opinion Microsoft and Apple is where the juice is. In the indexes, these are all looking pretty strong right here. Your techs, mid caps, the large caps, that's looking pretty strong. I do like the staples. I like the fact that it's longer term strong, and healthcare has been but healthcare has not been keeping up. I kind of like this. That's where the strength is for opportunities. This is tentatively favorable. Looks almost like this and this, where you get the follow through to the upside for another leg. So that's what thought would be, that it might could get to 450. Has to get to 430 first. But got possibilities. Sniper trades today. You've already seen ARE that was mostly sideways chop until the last collapse into the close. That's one of those failure to follow through to the upsides. It had 4 chances to roll up and it didn't. So that's a reason to stick around. You had 1 chance, 2, 3, 4, and nothing. There was a tight lid on it. So now when it breaks down below all this, that makes this a resistance level. Could not break through, and now you program for a return to this price level. You get 1 leg down, 2 legs down, and ready for more tomorrow to the downside. That's how I'm reading that. Coinbase, this is called follow the mover. Find and follow the mover. So had a nice little gap up. This was a second day continuation. Yesterday was strong also. So you got the PSAR flip. Here's your OR3. Standard risk box. Standard exit, COTA 2. Standard exit, COTA 2. Standard exit, COTA 2. Scratch. Just following the rules. Tesla. This had a nice big gap up to here. This is the OR3, so I buy the breakout. It rolls up. I get out of it barely with a no lose plus dinner for 2. I'm committed to the long side, so I missed completely the short. But I get I was treating this felt like a COTA 2 because this is what I saw. And this felt like what was possible up here. So I'm looking at that as the tactical trade. This is where it gets interesting up here, if it gets above that high. So standard entry, $5 risk. Quick scratch. Or loss of a 0.5 actually. COTA 2 re-entry. This still feels like caught a 2, so you just hold your nose and fire away. And this is where I would be executing. Failed to execute. If you take that execution, you got to re-enter there. That would have been the better play. Standard exit, caught a 2, running out of steam. So I don't think I played this one very well all day. I was, I think, lucky to get out of this with some money. This was, I wanted to get out here after it had already failed once and twice. But I said, no, I'll use the PSAR. And then this one, I should have exited here and re-entered. I could have added a second position, but I was depressed by all of this failure to follow through, so I just stayed with one. So, give myself about a C- on that one. This is Treasuries. So here's the open. This one was odd that it started recovering here because the market was going up. This sold off in the usual way. Then the market started to stall, and this came back and hit an SSC. So I said, all right, let's give it a try. See how it works. This is a very large market, so TLT is very orderly with small spreads. Now it's getting interesting because here was the last, RL10. It's now going to be interesting. What's it going to do? And I'm just watching where the PSAR is. So the stop's got to be about here by now. I wouldn't be offended if you were there. Standard exit, caught a 2 re-entry, quick scratch, quick re-entry, quick scratch, quick re-entry, and then another pretty good gain there going into the close. This one was a bit surprising. This shows signs of strength for tomorrow in TLT. When you get that kind of tactical run at the end, that's people that were willing to hold that nice gain, which was a gain, a consolidation, and a gain, and holding that into the close. That's a good sign for Treasuries tomorrow, and maybe a sign of weakness for equities tomorrow. So, word to the wise. Final one. This is... Oh, no, I already got that one. I already got Treasuries, sorry. Double tapped. Okay. Discard. All right, let's go to the... let's go to the traders today. I would like to see you guys finding the movers a little more. Now, there's value in mastering one symbol, but the next level of skill is to be able to manage 3 or 4 symbols, tracking them all, and then finding the one that's in play to concentrate on. When you can get about 4 like that, then you can start expanding your radar screen to find the movers and then trade them intraday. All right, here's another. This was the MPW frame from Eugene from yesterday. Let's see how that played out. He got paid initially and scratched on the second one. So he kept 2 out of the 3.5. He scratched on one that had the maximum 1.5. So there's not a lot of wiggle room on that second trade. So, that you would take 2 from that kind of move all day. The thing to look for, I think, is probably that exit there. So when you had that nice move down, it opened and sold off. When this comes above the previous low, maybe there's a room for improvement in there by a half an hour. But otherwise, you got what was available, I think, from that. Here's Paul. Let's see. So I think it felt like to me this was a Cotta 2 in here. You might have been able to take that when it crosses the when this crosses the RL crosses the dragon. You have this higher low. I'd have been tempted somewhere around in here. Still, I don't mind that, but I think I'd like to see you get out here or here, somewhere in that level. That's not much waste, if I can put it that way. And the reason is, in this whole region, you should be looking to get out of this thing once it breaks through the dragon, because it failed so quickly. The last time it was here, it failed down to here. It didn't really get any higher. So as long as it's stuck in the dragon, that's okay. But as soon as it leaves the dragon, so in retrospect, that's not bad. That's still pretty good. And then I would say look at the 1, 2, 3 exit is right here. Trim that when you have a nice move like that, trim that one at the edge of the dragon, and that'll make the difference on your move there. This entry, and similarly, this one gets right up to where it failed the last 2 times, and so I think I want to get out of it in this bar, something like there or here if I can, and then that would save you some of this pain and suffering. And you see one of the challenges, ARE is not as liquid as some of these other instruments. And so you will sometimes see that really excessive volatility when there's not much volume. And then sometimes you will see that discontinuity even intraday, because there's not as much volume on this one as there is on, say, the broad indexes or the seriously large caps. That's one of the consequences of trading that one. I mean, it's still fairly liquid as an S&P 500, but, Tesla. I found this one hard today, too. This was I think this is where I got in on this, or maybe I was up around in here. Off after this rise, I was tempted, and I think I got in right around there, and then ended up getting out of this pretty quick. I didn't want to short it today, neither did you, but after the second fail, I like that short right here, because now you have something like a collapsing dragon. I think you could have been short here or here. This was a pretty good exit. It's like a 1, 2, 3. You did keep some of it. Good patience. I like this one. And then if you have a stop like right there, that's about as good as you're going to get on that. There just wasn't much room in that one today until later in the afternoon. Arch on the Aussie. And this is why I think you got to get another symbol, because this was just in a meat grinder all day. So if we're going to start here, and we're already out of the river, it seems to me we could have maybe had this trade. Now on this reversal, that's where you want your entry, right about here rather than there. Then if you've got this in hand, somewhere about in here we got to get out so that we want to get paid on our first trade. This one is, again, slow to get in. This should be getting in here when it crosses the PSAR. On this kind of maximum excursion, I wouldn't be offended if you kept a little piece. And, you know, really, you got about what was there. No, I'm sorry, you gave back to this, gave back to here. So I think that's definitely staying too long. After a maximum favorable excursion of this, I don't want to lose money on that one. This is getting to be, yeah, caught a 2 and scratch. I could see a caught a 2 re-entry possibly here. And then I think you saw that too. And then when you get this far in hand, we'd have to get paid on this. This looks like the short. And again, we're still pretty far in the money and gave back to a scratch. And then I think, oh, okay, so you were away from the market there. So this is such a tight death spiral in here that's where I think we got to have another, maybe another currency, so that if this is not moving, that you get something to work with. There's just no follow-throughs to speak of anywhere in here. That's just a sideways grinding kind of a day. This is a PayPal. Yeah, so this one was, so this is the daily, and this is the weekly. The Heikin-Ashi just shows how painful PayPal has been. And this is what's happening to all of the financial services that are beginning to come out of that terrible depression. And on the daily, this little 3-week move looks like this. And then today, after this gap when there was no follow-through, this was a short intraday, but not one that I want to hold overnight, to be honest. And then this is the 65-minute chart. Again, here's your gap up. When that can't hold, one of the techniques here is put that risk box on it and then play the breakdown out of it. There was a tradable move in there possible. But on a day like today where all of the financial service disruptors are working, I'd rather see you able to find Coinbase rather than try to short PayPal. And again, what you're getting, this is where we're just grinding. There's one that we got to, that's the stop and reverse. That should get paid. A re-entry here should get paid. That's a good loss. This is where the short should be, not down here. Then that should at least scratch. I would have tried this one short again here and tried to scratch. That's a good short. And then we let it get all the way to here. Oh, no, I'm sorry. You were long and then fail. This is where the short should be. The long should be, again, we're late by about a bar. You know, we're about 3 minutes behind on every trade here, and it's hurting us. And then that should be our short. I mean, that's the collapsing dragon all day. And here's a Kata 2 all day. Oh, I'm sorry, you're out of the market naturally. I like that. There just wasn't much. Here's the re-entry. That should get paid. Here's the re-entry. That should get paid. It did. I just think we're a bar short on all of these. Or a bar too long, that's what I mean. We're not on the front foot enough. We're waiting one extra bar, and that's making a difference. So that wasn't good. On this symbol, the overall daily score was positive, but which is the argument for having more than one symbol. And today it was Devon Energy. And again, this is the reason to find the mover. So this one is making money during that whole time when you were getting chewed up on the other one. So if you've got a mover, smoke that one for all it's worth, because instead of those other fire and quick losses, we could be getting second and third positions in this one and putting that mover to work for us. That's what we want to do. Notice when this one finds support where it found support, we want to try to get that move. And then failure to fail, try to get that move. So the theme today, guys, find the movers and have a small stable of uncorrelated targets that you can work with. But good work today. And I think that's everything I got for you. Let me check the room one more time. Yep, that was it. Yep. All right, that's everything I got for you guys. We'll be ready to see you tomorrow.